right. Maybe you're frustrated seeing other people get approved for high limit credit cards, business credit cards, 0% cards. You're kind of stuck in a situation where you don't know why you're getting denied and or getting low limit cards. So in this video, I'm going to explain 3 to 5 reasons on probably why this is happening, give you guys some insight on what you can do to change that, and hopefully put you in a better position. Now, the reason why I'm making this video, if this is your first time on the channel, my name is Zach. Some people call me Rip. I work with creators, business owners, entrepreneurs to be able to access capital so they can build, grow, and scale their businesses through a strategy-based lending protocol. Now, I'm making this because a lot of people see other people basically promising, you know what, no matter what, we can get you $250,000, $300,000. Well, that's not the case, because if you don't have these things set up, you're not going to have access to that amount of capital. So let's actually just dive into it and show you guys what that looks like and what to be aware about. So if you're getting denied at high limits, if you have a good credit score, just to be completely frank, it's just optics. It doesn't really matter initially, because just because you have a good credit score doesn't mean that your credit report is actually showing the banks what they want. So the first thing that initially stands out to banks when you're getting credit limits, credit scores, business credit cards or additional lending is going to be your comparable credit. So you might have a good score, but the fact of the matter is if you have 3, 4, 5K on credit cards, then you don't look good to them because you're not showing them that you can actually handle large amounts of capital. Now, you might have good payment history, but you haven't shown that you can handle 10, 15, 20K on a card. Now, one other thing, if you're in a position where you have high utilization, you have missed payments, you have negatives, bankruptcies, all of that is drastically going to affect your ability to get approved and, of course, get larger limits, because the banks don't want to bet on you. They don't want to give you their money if you haven't shown that you can handle and utilize the money properly, or that you have missed payments. Now, if you're a business owner and you have missed payments from over 2 years ago, you can still get access to capital because you've proven and you've shown over the last 2 years that you can make payments, right? But if it's recent, within 2 years, I recommend, getting those things removed through credit repair. Now, the other piece is when we look at our FICO score and what goes into our credit score, 30% of what goes into our score is utilization, which is why if you have comparable credit or low comparable credit limits, in this situation, you have 7K in total limits. You're basically one purchase or just one bad month away from having high utilization. So you have low limits, you may be responsible with it, but once you go over 30%, your credit score is actually going to drop, which is why we also want to not only show the banks that we can handle larger amounts of limits, but that we're not put in a position where we're in utilization hell, which happens to a lot of people, where you have 30, 40, 50, 60, 70% utilization. And now you have no access to any capital, to any outside lending, because no bank wants to lend it to you when you need capital. So that's why we want to have high credit limits, is not only to show the banks that we can handle high limits, but also so we don't get in a position of high utilization. So that is a red flag to the banks. Now, what you can do currently, if you're right here, you have a couple of cards and they're small limits, is you can ask those banks, reach out to them either through the portal or call them and ask them for soft pull credit limit increases. Now, what I will say is a lot of people ask for credit limit increases, but they're not actually using the cards. So you want to make sure you're using the cards for 30, 60, 90 days before you ask for a credit limit increase. Because if they see you're not actually using the card, even though you have 3, 4K limit on that card and you want 10K on the card, if you're not using it, they didn't have no reason to give you a credit limit increase, right? So that's a quick win. Take your cards now, ask or call in and see if they can do a soft pull credit limit increase, right? A soft pull means they're not going to pull your credit, so you're not going to get an inquiry on that card. So that's a quick win. Now, let's talk about the other piece, right? Comparable credit, which we touched on. And the reason why it's important is lenders are typically determining how well you might manage a similar loan or credit line. So this is why we want to have higher limits, because they're typically going to give us higher limits when they pull the credit and they see that you can handle it in strong payment history. If you have 3K, 4K, a lot of them are just going to give you within 20% or the same, if not less than that amount. Right. So you're just going to keep having applications and getting applications with the wrong banks and the wrong cards, because you're looking at all this information from tons of different people and you're just going to, not get higher limits. Just because you have a good credit score and just because you have an LLC doesn't provide you any real advantage or any extra benefit to the banks. Like, they don't care. They want to know what's on your report, not your credit score. And the banks don't want to be the first one, right, to lend to you. They don't want to be the first one to take a risk on you by giving you 25K when you've never handled 25K. The other piece is comparable loans. The reason why comparable loans are great is secured loans look great because you're securing your capital to get a loan. Unsecured loans, installment loans, they also look good because it's a different part of the credit mix, which also goes into your credit score. So it's a different part of the credit mix. It shows that you can handle a different lending product, and they're typically larger amounts than your typical credit limits as well. So you can handle a large amount, you can make payments on time, you can pay, the slight interest that you got, and that shows the banks that you can handle multiple things in larger amounts. So comparable loans are great. Now the problem is if you don't have comparable loans, it's really hard to then get loans. So if you take the example of a young gun, like these young kids, 17, 18, 19, under 25, that are getting rich really fast. They want to, splurge on an exotic car or a six-figure car. The bank pulls the credit, and if they only have a 4K credit card and maybe a small auto loan under 10K, they don't have any other installment loans. There's really no history of paying the payment that they're expected to pay for that six-figure car per month. So they're either going to deny you, they're either going to approve you with a crazy down payment of 50%, 60%, 70%, and they're either going to give you a crazy interest rate, which is also why people don't take into this account, or they don't take their credit seriously. This is why a ton of people are drowning in car payments, right? They have 15, 20% interest on car payments when a car is a depreciating asset. No matter what, when you take it off the lot, you're pretty much losing money. So you want to be able to have good credit and comparable loans so you can get an exotic car or a nicer car with no money down and a super low interest, under 5%, right? So that's what you want. Now, when it comes to comparable loans, if you were to apply to some of them, I have some videos on the channel, right? Good debt to income is very important to think about and factor in, right? How much you're making versus how much payments you are, making for the current loans, the current debt that you have. All of that goes into account. And the reason why comparable loans are important is because if you want a $50,000 loan, you should probably have something between 25 and 50% less than the amount that you want, which is why they're willing to give it to you. So if you want the $100,000 car, you should probably have a $50,000 to $70,000 loan previously that you're making payments on or you have made payments on. And if you want a $50,000 loan, you should probably have a $20,000 to $30,000 loan previously so that you're approved for a good interest rate and you get approved instead of denied. So comparable loans are another great piece. That's why people, and I'll talk about it, go the secured loan route or the pledge loan route. So you might be asking, like, how do we build trust? How do we build up our bank accounts? How do we build up our credit limits with the bank so that we're in a better position? Well, my advice is you want to go to the tier one banks, because tier one banks and having those in a report are going to look better for all banks. They're primary, like Chase, Wells, American Express, in my opinion, Bank of America. They have more products, personal side, business side, BLOCs, business loans, all of that. And when you establish relationships with these banks, they are typically going to give you higher limits. Right. Once you've established a relationship with them, that could be on the personal card route if you already have some credit built, or on the bank account side, because once you put money in that bank, they want to give you money. Right. So you establish a relationship that way. The other key piece is I like these banks because they have travel rewards outside of Bank of America, Wells Fargo Autograph, Chase, Amex. Like, I've saved $50,000 worth of travel because I know how to use the rewards from these cards and these sign-up bonuses. Now, if you really want to improve your credit limits initially, then I would go to a local credit union, as they're more relationship based and they're quicker to increase the limits through a relationship with them. So either a local credit union or you go to Navy Federal or Penn Federal. These local credit unions, once you establish a relationship, a bank account with them, you're going to build an internal score, and they're much more willing to give you 8, 10, 15, 20K on a card. And once you get a big limit card, right, it's going to help all your future approvals on the personal side and the business side. Now, if you're someone that is younger, add an authorized user. Add 1 or 2 authorized users. If you don't have much credit age, honestly, everyone should add an authorized user. Someone that has a higher limit, 100% payment history, and of course, a good age on those cards. It's going to improve, right, what goes into your credit report and your credit mix. Now, there's other trade line options you can add in to help, make you look a little bit more trustworthy for the banks and the lenders. And that is rent reporters, kickoff, credit strong. You can add these to your report to help you out. So now you're in a position where you have good relationships with the right banks. You have personal cards with 10 to 20K on those cards and those credit cards. Maybe you've gone to Navy Federal or a credit union where you're getting a secured loan, which is you take your capital. If you're already making money and you're going to make some big purchases in the future, I know a lot of people that do this. Take $50,000, get a secured pledge loan, right? They give it to Navy Federal, for example. That's what a secured pledge loan is. Then Navy Federal gives you the $50,000 back. So you gave them 50, they gave you 50 back. Then you take that, pay off 98%, 99% of that loan. Now you have a payment reporting every freaking month for the next 5 years. It looks good. It looks like it's 98, 99% paid off. And then they basically give you your money back, which you can then put in your bank account. So secured loans or other installment loans are really great options that are provided by, some credit unions and other local credit unions. Just reach out to them if you can't get into, Navy Federal or Penn Federal. So now you're in a position where you've got higher limits on your personal cards. You don't have a utilization problem, which is going to be a major factor. right? And you have comparable credit and loans. Now, if you got new comparable credit and you just got new comparable loans, right, those new accounts you don't want to apply to business credit cards or 0% cards until 6-12 months has passed. You got to let them age, because if that is another reason is if you had a lot of new accounts within the last 3 to 6 months, the banks aren't going to want to give you high limits or lend to you because you look a little bit desperate for credit. So that's another piece. But now you have at least some of these personal relationships. You have some of the high credit limits, and you've allowed some time to season. Maybe you've added an authorized user to improve your age. The other piece is going to be building business bank accounts and relationships with those banks, because then they're also more willing to give you larger limits. So that would be, the fourth or fifth option is you need to build a relationship, let it season, have some deposits and transactions go into that. When you do all of this, right, you have better interest rates, you end up getting better limits, you have more leverage with the banks, you have more banks that you can go to. And like I said, when you open business bank accounts and you season them, you build transactions, you're basically shaking hands with them, and they're more willing to give you money than someone that just walked in the door and asked for a certain amount. Now, there's a lot of things that go into that, the amount that you put in, the amount of transactions, the length of that relationship. But just understand, like, that's a huge piece, especially right now in modern day with how the economy is. Having relationship-based banking is super important. So that's how you can access $50,000 to $150,000 or more when you're just starting a business or you currently have a business. And that's how you leverage the greatest system in the world that you have access to, which is the US banking system. I keep saying this. No other place in the world allows people to build a business, build more cash flow models, invest in their businesses, and grow their businesses with their banks, right? They're giving you options at 0% for 6, 12, 18 months to be able to do this. Greatest benefit to you as a US citizen is leveraging the banks available to you. Those are the core pieces that may be happening if you're getting low limits, if you're getting denied, right? You don't want to have negatives. You don't want to have any of that stuff on your credit report. So that should cover the main reasons why you might not be getting approved for larger limits or better limits, or you may be getting denied. I just see a lot of claims and a lot of people basically promising a certain amount of cash in the industry when that is not the case. There are so many things that go into a application process and a sequence for business credit cards and accessing lending for your business that they don't really talk about, right? Because most people don't understand. So either way, great. Ask questions down below. If you want to work with me directly, I have a link down below. If you fit the requirements, we can always hop on a call, see if it makes sense for us to work together and me being able to help you build, grow, and scale your business with the access of our strategy-based lending protocol. I'll see you guys in the next video. Appreciate you guys. Hit like, hit subscribe. 80% of you guys aren't subscribed yet. So hit subscribe, see some of the next videos where I drop some game, and we'll see you on the next one. Peace.